Module Summary: Financial Concepts Applicable to Oracle eBusiness Suite. By the end of this module, you'll be able to understand the following topics. We're going to start by a basic business scenario, which is where I'm going to explain you the concept of business group, legal entity, ledger, chart of accounts, balancing segment, and taxation structure. Once we have this understanding, it will act like a basic building blocks for you to understand the higher topics, which is where I'm going to visit the business scenario once more, and then I'm going to detail that with a couple of more business scenarios. And that's where I'm going to move on to further higher topics which are specific to Oracle eBusiness Suite, such as the description of what is meant by an operating unit, an inventory organization, a sub-inventory, and finally a human resources organization. So by the end of this entire module, you will be in a very good position to understand the basic description of entities in Oracle eBusiness Suite. Alright, so let's get started with understanding the basic business scenario in relation to Oracle eBusiness Suite. Organizations in Oracle eBusiness Suite. Before we proceed to the lesson of understanding a basic business scenario, I thought it's a good idea that I explain you the concept of organizations. Organizations, as the name suggests, could depict an entire organization. However, in eBusiness Suite, organization can refer to a number of business related entities. It's a bit confusing, and that's the reason I thought I will highlight that to you and explain it in detail. So the organization and organization hierarchies of an enterprise are closely interrelated with the policies and procedures of that enterprise. Organizations are departments. They could be sections, divisions, companies, or other organizational units in your enterprise. For example, Fremont Corporation is a very large organization. Within that, you've got subsidiary companies. Let's say one of the companies is in Singapore, another company is in New Zealand, another company is in Australia, and they've got, say, one more company in Germany. So all these multiple subsidiary companies can be called as organizations in themselves. And within those companies, if you define departments or divisions, those divisions can also be called as organizations in eBusiness Suite. You can also create organizations that represent your external contractors. You can gather collections of organizations into organizational hierarchies. Organizational hierarchy makes it easier to manage expenditure and reporting data and coordinate the project owning organization within your enterprise as far as Oracle project related setups are concerned. So hierarchies helps you in kind of securing access to multiple organizations. This is something I will explain you later in my module called as multi-org access control, which is where I'm going to show you an organization hierarchy and how you can restrict access to different users based on different organizations. So as you could see, here we talked about different types of organizations, but when you actually go and define those different types of organizations in eBusiness Suite, it will have a prefix associated or some kind of a synonym associated with that organization. As an example, Fremont Corporation is a business group, which is a type of organization in Oracle eBusiness Suite. So in Oracle, it is called as a business group organization. Similarly, Fremont Corporation underneath the organization hierarchy has got multiple operating units or multiple companies. If you define them as multiple companies, in other words, if they are registered as companies within the legislative structure of that country in which it operates, then you must define them as legal entities. And within each companies, you can have different divisions. For example, a sales organization, a support organization, a consulting organization, and so on. So all these divisions you can classify as organizations. Likewise, Let's say, for example, they've got a subsidiary in New Zealand. In New Zealand, you've got two major cities or two major islands in New Zealand, let's say North Island and the South Island. And in order to keep the transactions separate, you would like to define two operating units within your New Zealand legal entity. One you call it as a North Island organization, second one you call it as a South Island organization. In other words, these two subsidiary organizations are nothing but the operating unit, which lets you separate your transactions according to the zones that you have defined. So the transactions pertaining to Northern Island operating unit will not be visible to South and vice versa. So that's like one of the advantages of operating unit, but there are several others. The other type of organization could be an inventory organization. So inventory organization is something like within an operating unit, you want to define stores. So let's say you have got warehouses. So those warehouses, you would like to define them as inventory organization with a associated location or an address. Then you've got HR organization. So HR organization are used for defining your employees, their payroll related data, and so on. Then as far as Oracle project related modules are concerned, there are several different types of organization I have listed over here, such as project task owning organization, project expenditure event organizations, expenditure organizations, resource organizations, billing schedule organizations, project burdening hierarchy organizations, project invoice collection organizations, and so on. So these are like different examples of organizations that I thought you should be aware of to avoid any confusion going forward. Alright, now let's go and understand a realistic business scenario which will let us understand a number of concepts related to Oracle eBusiness Suite. Basic business scenario. So let me take a simple business scenario to let you understand a number of concepts in Oracle eBusiness Suite, and then I'm going to expand that further and explain you a couple of more business scenarios as we go along in the course. Okay, so to let you understand this, I'm going to take you to my slide over here. So let's assume that I've got a company by the name of Mango Corporation. Okay, so let's say I'm going to write it over here, Mango Corporation. Now this company, I have established that in New Zealand. Okay, so what is a company? A company is something which is responsible for doing business, right? Which could include buying, selling, hiring employees, filing taxes, and so on, right? So that's nothing but a company. A company is registered according to the local business laws in a specific jurisdiction. So as far as New Zealand is concerned, the jurisdiction is the country New Zealand itself. Okay, so I'm going to write jurisdiction over here. And then as soon as I register my company, I will get a unique company number, is it not? So that I'm going to write over here. Let's say company number. Then I have to register a company tax ID for filing income tax returns. So one type of tax is your income tax ID. So every financial year end, the company must file their tax returns. The other type of tax the company should file is sales tax. So in New Zealand, this is called as GST, General Sales Tax, okay, which is of 15% on the goods sold. So these are like the taxation related requirement. Then a company can hire employees. So if they hire employees and they pay salaries to those employees, then they must deduct the income tax on behalf of the salary they are paying to the employees and file it with the government. So that income tax will be filed over here, right? So now this is a very simple business scenario. Okay, so if you expand that and make it complex, for example, I have just said that I've got only one New Zealand company, and for that I have a income tax ID registered for GST, and I'm going to hire employees as a company. Now this is a simple scenario, but you can make it complex, such as within New Zealand itself you've got, say, two operations. One is in Wellington and one is in Auckland. Within Wellington you've got warehouses, let's say warehouse 1, warehouse 2. Within Auckland again you've got one warehouse, let's say warehouse 3. Now within that warehouse, what you do, you subdivide that warehouse into separate locations within that warehouse, which can be called as sub inventories. And within those sub inventories you store the items to sell to the customer or your raw material. Fine. So this is assuming that this company is into, say, some kind of distribution business. So not all the companies are necessarily into distribution business. There are several different kind of companies. For example, a services related company, they may not have this warehouse structure at all. So their structure would be what I have just explained you in terms of the simple structure. However, they can have multiple operations, like in different cities, and each of these operations and the transactions associated with that, they may not like the transactions to be visible across the operating unit, or they may want to have that. Oracle allows both the flexibility. You can segregate the transaction without having the personnel of operating unit 1 to have a visibility in the transactions of operating unit 2. At the same time, Oracle gives you flexibility to have one employee see both the transactions in both the operating units. Now, taking this simple business scenario, I'm going to explain you a couple of concepts over here. So let's say the first thing is a business group. So what is a business group? I'm going to explain you in the next movie. Business group. So let's go back to the slide I was explaining you the business scenario on. So in this case, what is a business group? You can say that Mango Corporation is a business group in itself. However, the concept of business group hold good when you've got multiple companies or complex operations in a company structure. As an example, if I go back to my slide and if I scroll up, this is a good example of a business group. Fremont Corporation, it's got multiple entities within that, and each of these entities could be a company in itself. So a business group, Fremont Corporation, have got 3 companies in that. One company is Fremont Engineering, second is Fremont Construction, third is Fremont Services. A business group need not be a registered entity. Usually when you register a company, you register with the government bodies, you don't register that as a business group, but you register that as a legal entity, which is responsible for filing tax returns, hiring employees, and so on. Whereas a business group is most of the time is a logical entity which represents a collection of entities. There could be some countries which could even allow registration of a business group. So in any case, a business group should ideally contain a collection of companies in that. That's where it makes sense. So as far as our simple scenario is concerned, our business group, we don't have a business group. So assuming that if you've got another business entity, so this is in New Zealand, let's say you've got another business entity which is here, let's say Mango Australia Limited. So then we can call our business group as Mango Corporation, and within that we've got two companies. One is Mango Australia and second is Mango New Zealand Limited, right? So once you have identified the business group, you should go to eBusiness Suite and define that in this particular form. So let's go to eBusiness Suite. This is the login form, and here you log in, let's say with the demo user. This is a demonstration instance. Operations, the default password is welcome, and then hit the login button. The form for defining a business group can be accessed in multiple places. It could be accessed from general ledger responsibility, or it could be accessed from inventory responsibility. So by default, in a demonstration instance, multiple responsibilities have got access to the form wherein you define the business group. You can also define a business group from human resources. So let's go to inventory responsibility, inventory vision operations USA. Looks like it's still loading. For the first time when you click on these links after you start your instance, the first time load it may be a bit slow, but once it gets loaded, it caches that into the memory of the server. So next time when you come and click on the same links, then it's much faster. Okay, now I'm going to go to the setup, and then I'm going to go to organizations, then organization again. So it's going to launch a JRE form. And there you go. So once you have reached this form, the first step is you click on the new button to define a new business group, and these are the things that you've got to define it in a new business group definition, and then you choose the type here as a business group. There are a few more things that goes with the definition of business group, so that is something I'm going to explain you in my general ledger functional foundation course as we go along, but don't worry about it at the moment. So that is how you go about defining a business group after you have identified it in eBusiness Suite. So to summarize, a business group is something in an organization representing the consolidated enterprise or a major division or an operation company used by human resources application. A business group is a highest level in a organization hierarchy, which is something I have shown you over here. This could be a business group example. Legal entity. So let's first understand the book definition of legal entity, and then I'm going to explain you in the context of our business scenario. So a legal entity is a clearly identified entity which is given rights and responsibilities under commercial law through registration with a country's appropriate legal authority. These rights and responsibilities are enforceable through the judicial system. So in other words, a legal entity is a company registered according to a local country's commercial law, and they are responsible according to that company's commercial laws, such as for filing the tax returns, or if they are late in filing the tax returns, then they would be liable for penalty. Similarly, they could be liable for other kind of legislation requirement, including lawsuits if filed against them, and so on. A legal entity generally has the right to own property, trade, the responsibility to repay debt, and comply with the labor law. Legal entities are responsible to account for themselves to company regulators, taxation authorities, and owners according to rules specified in the relevant legislation. So it also depends on what kind of a legal entity you have registered. It could be a sole proprietorship, it could be a company, it could be partnership, it could be wholly owned subsidiary of a foreign entity, and so on. So depending on the type of company you have registered as a legal entity, its obligations may differ. A legal entity represents the designated legal employer for all employment related activities as well. A legal employer is a legal entity that is responsible for employing people in a particular country. Therefore, if you employ people in a country, then you must have at least one organization classified as a legal entity and a legal employer. So I think the bookish definition is pretty straightforward. So if we go back to our business scenario, what is a legal entity here? Yeah, I think as you're rightly thinking, this is what is our legal entity, Mango New Zealand Limited, as well as the second legal entity, Mango Australia Limited. So these are two legal entities according to our business scenario, which could potentially come under the business group of Mango Corporation. Ledger. Now before we go into the bookish definition of what exactly is a ledger, let's go back to our business scenario. So here I was explaining you that a legal entity is responsible for filing tax returns. If they hire employees, then they've got to also deduct the taxes and file tax returns. They are also responsible for charging sales taxes from their customers and then filing the sales taxes with the taxation authorities, and so on. So for all these transactions, what I just explained you, which include like payroll related transaction, let me write it at the bottom. So let's say payroll related transaction or sales related transaction or purchase related transaction. All these are what? These are captured using the company's accounting books. So each of the transaction will hit an account, a predefined account. It could be like payroll account, it could be like sales account, it could be like a cost of goods sold account, or it could be an expense account, and so on. So all these accounting entries for the transaction that happens gets captured into the accounting books of the company, and these accounting books are also called as ledgers in accounting, which is a simplistic definition I have given, but there is much more that happens. So let's understand the formal definition of what exactly is a ledger. So a ledger is a set of accounting information for a legal or a business entity. Each ledger is associated with a chart of accounts, calendar, currency, and subledger accounting method. for which accounting information is recorded. So a chart of account is what? A chart of account is nothing but a list of accounts, associated departments and the companies. So a list of accounts could be, as I was explaining you, a purchase account, sales account, expense account, retained earnings account, and so on. So you define the list of account, and for identification purposes you give them a unique code. And if you have multiple departments, then you also define departments within your chart of accounts to uniquely identify them. For example, you've got two sales department, one is for US West, one is for US East, and if a transaction happens in US West, then you would like to uniquely identify that sales transaction pertaining to a department in US West organization. So for this to happen, you got to have two entities defined. So let me do this. Let me just go back to my slide. I'm going to save this and I'm going to make a new one for you. So the example I was giving, let's say instead of US West, you can say the same organization we were in. So let's say you've got two operations, Wellington and Auckland, and in each of these you've got, let's say, a sales department. Here also you've got sales, let's say sales Wellington and sales Auckland. Okay, so what you do is you first define a company. So this is, let's say, our main company in New Zealand, and you define it and give it a unique code as 01. Similarly, if at all you've got an Australian based company, you define that Australian based company and give it a unique code of 02. Okay, and within that, these could be called as divisions. So you can classify your divisions, let's say 001. Here you classify it as 002. Fine. And each of these divisions will have unique departments. So you say this department as 0001 and say this as 0002. And then you have a common set of accounts which are pertaining to these company and shared across. So these common set of accounts could be, as I was saying, an expense account or a purchase account or a, let's say, retained earnings account or a cash account, accrual account, and so on. And each of these you can give a unique numbering for identification purposes. So let's say something like this and so on. Okay, so let's say if there is a transaction which happens in Wellington department and you want to uniquely identify that transaction, then what you have to do, first thing is, let's say something to do with expenses. So you say that this is the expense account and where it has happened in the department Wellington sales, and then what is the division, this is the division under which company, 01. So this is how you uniquely identify a transaction, and this is something what you called it as an accounting combination. Okay, likewise you can define the same accounting structure for Australian operation. So the reason I'm explaining you all that is these all definition of companies, associated codes, identifying those companies, divisions, departments, and account, these all goes into your chart of accounts structure definition. So if I go back to our PowerPoint, and it was referring to a ledger contains chart of accounts, calendar, and currency. So the one that I just explained you is nothing but the chart of accounts. And obviously a transaction happens on a date, so that is where we require a calendar, and then a transaction happens in a currency, so we got to capture that transaction value in an associated currency. And subledger accounting method, that accounting method could be on accrual basis or a cash basis, for which accounting information is recorded. In terms of ledger itself, there are two types of ledgers. One is called as a primary ledger and second is called as a secondary ledger. A primary ledger is, as the name says, shared across the enterprise, whereas a secondary ledger could be used to capture, let's say, foreign exchange information. So let's say your primary currency is New Zealand dollar, but for statutory requirement, let's say if your head office is in USA, you would like to convert that currency amount to USA, capture that into secondary ledger for statutory reporting requirements. So you can have that as an example, where a secondary ledger can be used for other purposes as well. You can also define a ledger which is called as reporting currencies ledger, which is where the example I gave you would fit perfectly well, which is like one of a kind of a secondary ledger. So each ledger is fully balanced and can be closed independently of other ledgers. So at the end of a period, a ledger must be closed for that period. So let's say November month is ending, so you can have a period close for that November month, reconcile all the transaction and then close the period and bring forward the remaining amount from that period, November to December. Alright, so that is the concept of ledger. As far as the ledger definition in Oracle is concerned, I'm going to quickly take you to that form as well so that you are aware where that thing can be defined. So you've got to go to General Ledger Responsibility. So General Ledger Vision Operations USA, and then you need to navigate to Setup, Financials, Accounting Setup Manager, and then Accounting Setups. It's going to open a HTML based form which is over here. Okay, and here if you search, let's say Vision Operations, and then it's going to give me all the ledgers by the name of Vision Operations. So there is one ledger, Vision Operations USA, and you can see the type of ledger is primary ledger and any other associated primary ledgers and its status, and there are several accounting options that goes into that, which I'm going to explain you as we go along. So anyway, that's the place you define your ledger, and this is the place you also associate a ledger to a legal entity. Obviously, the entire idea for defining a ledger is to capture the transactions of a legal entity. So you got to associate the ledgers and its definition to a related legal entity so that you can consolidate the transactions.